Good morning. Today I'm going to take you through the valuation model. So I've got a data model with these stocks in it. We can toggle various ones here. So the metric I'm using combines the price to gross profit and the rule of 40. And if you look at Meta and Microsoft, you can sort of see these range there between 13 and 23. So a company within that range is pretty good. That's the sort of the range you're sort of looking for. The lower range for Meta is because advertising revenue will drop off in a recession, and with Microsoft, they've got higher quality earnings. If you look at PayPal, they're actually under that range at 9, so that's very low. The reason for that is because PayPal isn't growing, and if you're not growing, you're not going to get a high valuation. And then if you look at Square, that's right at the bottom of the range as well. But you can argue that Square is growing faster than Microsoft. So why has it got a lower valuation? Well, that's because of the profitability. The operating margins are much lower than Microsoft. And it's also because of the market's giving it a very low price at the moment because of quality of earnings. So, and the interesting thing is, the market thinks that even during boom times, Square won't grow at 22%, which is what it did last quarter. It thinks growth could go back to come all the way into maybe 14%. And during a recession, the market is probably thinking that Square is going to have zero growth or bad earnings because of its loan book. And that's basically why Square is at the bottom of that range. But the opportunity is that Square accelerates growth, and instead of being 22% growth, let's say it goes back up to 25% growth. Now, all of a sudden, you have a company that is growing much faster than Microsoft. Microsoft grew at 17% last quarter. And a company that has lower operating margins, which is an opportunity to increase those margins. So as operating leverage comes in, those operating margins will start to grow. And as the street sees that, it sees the growth is high, sees the operating margins are growing, then that 13 multiple can't continue. I mean, the price is just going to have to go up. So this is the real opportunity for Square. It has to keep growing. It has to grow at least 22%, but increase it to maybe 25 to 30%. And it has to really push hard on operating earnings, operating margin. And if it does that, then this stock is extremely mispriced. Like with Microsoft, it's already operating at full capacity. It can't really increase its margins, and it can't really grow that much faster. So the risk for Microsoft is if any of those two things change to the negative, then the price is just going to come in big time. And the opportunity also for PayPal is if PayPal can actually finally start growing, well, then that 9 multiple isn't sustainable. I mean, that's going to at least go up to 13 if PayPal can start growing it. Let's say they can grow their gross profit by 10%. That multiple is probably going to go up to 13 easily. So you can argue that's a 50% increase in price. So this is the video on valuation. I'm going to stop here and put another one out soon, but for now, see you later.